Hello to you. Well, I want to bring you literally day one's highlights. And for me, there's a saying that's going to sum up this entire thing, which is proximity is power. And I've had the most incredible day. I mean, I thought I knew quite a lot about geopolitics, economics, how to invest, interest rates, the conflict with China, property fundamentals, you name it. But my mind was literally and truly blown away. And what I want to share with you is literally some of the best takeaways that I can. Now, just imagine, I'm here at this Investor Summit. It's the 23rd Investor Summit. They've been running this for 23 years. And just imagine the value of the information that's in these two books. So this here is the workbook, and I can talk through just some of the incredible speakers that they have actually invited, literally some of the world's best. They don't pay them, just to be clear. So they do not pay them to be here. This is one of the best investor conferences, one of the most exclusive investor conferences in the world. And these speakers and some of the top investors in the world turn up because of the opportunity to network and to play at the highest level. And then on this side, I have my iPad, and this is where I am literally taking all the notes on every single speaker, no matter what the topic, so that I can learn. But I'm also recording all the presentations so that I can not only give you the audio files, but I can also turn them into cheat sheets. So how much value is it for you with regards to both of these things? If you would like access to this, you can literally click on the link below. You can join our Wealth University community. And in that community, I will be sharing with you every single day my key takeaways. I'll also be sharing with you my top 5 tips from the day. And then I will be sharing with you all of the insights. But the most important thing is that you can have all the knowledge in the world, but what do you actually do with it? And so what I'm going to be doing is creating action modules, blueprints on how you can take all this information and actually execute on it. So if that sounds good to you, then I'd literally click on the link below and join us. So why don't we get straight into literally day one. Let me just put this iPad down. And what I want to do is that you can see here that I'm literally going to be going through my notes. Now, if you click on the video up above here, this is the short version. So for those of you that are super, don't have time, whatever, you can literally get my 5 tips where I'll keep it really short, really concise, and the 5 biggest takeaways for me of the day. However, there's no ways that I can do it justice for you when you take into account the caliber of people that I met yesterday and some of the speakers, that I could literally do 5 tips in like 2 minutes or something. So I want to take you through what my key takeaways were in terms of yesterday, in terms of this process. So for me, day one, Robert. So Robert Helms was the guy that was effectively putting the entire event on. He runs Real Estate Guys. And a couple of things that he said that I think are really, really valuable. The first one is you don't have to be years ahead. You just have to be ahead of all the others. So that's really interesting. So with you out there gathering, I always say you need the right information and the right partners. You don't need to have all the information, but you do need to have a little bit more information than the guy next to you. And that's why I'm here, because I want to basically find out what the best in the world are doing, what is the best thinking, what is the best knowledge, where are the trends going, because it helps you be a better investor. The next thing was the fundamentals. It's so interesting. I've been investing in America now since 2012, 13 years, hundreds of millions of dollars, and nothing changes when it comes to the fundamentals. Things like affordability, population growth, the states which are tenant friendly in terms of that whole process. And there's a whole bunch of charts that I can share with you, and I will share with the Mastermind and Unpacked community around which are the right states to invest in, which cities should you be investing in, and why. The next thing that he said, which I really enjoyed, was he said there's so much uncertainty out there, and he went through AI and he went through all of the major things that people are concerned about. But he said, what questions should we be asking ourselves? And the 3 biggest questions that he set as a precedent for the entire Investor Summit were, what is wealth? So something we're going to be discussing over the next 9 days is what is wealth? And it's not just about how much money you have in your bank account. The second one is diversification. Now that was music to my ears, because as you know, we specialize in diversification. And as Ray Dalio says, diversification is the single most important component to financial success. But the question is, how do you actually do it? And then the third one was, how do you get educated? And it was so interesting because he told a story of his son, and it started off with showing a picture of the best shotgun, the person that shoots a shotgun and at the Olympics. And he's the best shotgun shooter ever in the history of the sport. He's been to the Olympics 4 times, he's won it 4 times, etc. And then he showed a picture of his son, and his son is state champion twice over for Texas, and he's only 17. And he went on to tell us that his son literally operates in the exact same shooting range, and he's being trained by the best in the world. And the thing that was so interesting here is that he said, and it was a quote from his dad, which I loved, he said, you don't have to give natural birth to ideas. You can actually adopt them. And this is where the whole principle of proximity is power comes in, because you don't have to learn everything. You don't have to know everything, but you can truly go out there and learn from the best. You can surround yourself with the best. We've all heard that saying by Jim Rohn 1,000 times. You are the sum of the 5 people that you hang around with. And he finished off with the 3 keys to mastery, which was taught by this Olympic champion, 4 times over Olympic champion. And he said, you've got to increase your quantity. So for those of you, subscribe to this channel or literally follow us in the community group, because it's about the quantity. You need to be putting the time, the energy, and the effort into something that's important to you. And if investing in wealth is something that's important to you, then you should be there. The second is the consistency. You need to do it over and over again. And that's the benefit of being part of the wealth hackers and all the mastermind, because they are consistently getting reinforced every single week, every single month, every single quarter, every single year. That is how you ultimately get to success and the results that you want. And the third is quality. And that's why I'm here. That's why I invested $10,000 to be here, because you can learn from anyone. There's so much information out there on the internet. But the question is, how do you actually find the right information, and what do you actually do with it? And that's where the quality comes in. And this is a group of people from around the world that are literally some of the top investors and speakers in the world, some of the top investors. There's only 130 of us. It's a truly unique opportunity to be with the quality. So if this is something you're enjoying, click on the link below, join us in the school group, the Wealth University School Group, and I will be sharing a lot more with you in terms of that process. Right, let's move on to number 2. Now, George Gammon literally blew my mind. Literally blew my mind. I know I sound arrogant now. I thought I understand economics and how the world works. I really did, until he started to speak. And I literally had to hold on. Like, it was like going on a roller coaster where you had to hold on as fast as you could. He's got a company called Rebel Capitalist, and he speaks a lot about interest rates and where are interest rates going. And what I found really interesting is that he said, and he proved to us, that it has nothing to do with supply and it has nothing to do with the printing debt. So everyone thinks you've got this massive debt crisis in America and that's going to impact interest rates, and he literally proved to us it has nothing to do with supply and nothing to do with debt. What he did prove to us as well is that it has everything to do with growth and inflation expectations. So where do you see the world going? Not just America, but where do you see the world going? And depending on where the world is going has an impact on interest rates. If you see the world, if the banks, so if the commercial banks, not the Fed, not the reserves, the commercial banks, if the commercial banks deem that the global growth is going up or inflation is going up, then interest rates are going to continue to go up. If the commercial banks deem that the world growth is going down and interest rates and inflation expectations are going down, then interest rates are going down. And it was so interesting because he went on to say that oil and tariffs are irrelevant. They are literally blips. They have short-term noise. But if you're a real estate investor, it comes down to one thing and one thing only. What is your expectation over the next 2 years as to where you see global growth and global inflation expectations going? And based on that, you can make a decision with regards to interest rates. And overwhelmingly, he said right at the end that his expectation was interest rates were coming down. Then we moved on to Brent Johnson. Oh, and just by the way, if you are interested, you can literally click on the link below. And in the school group, I've put together a cheat sheet on everything that I just shared around George Gammon, because it's an absolutely fascinating presentation. And anyone that's got anything to do with investing needs to know about interest rates and inflation. And it's the best I've seen in the world, literally the best. And I've put together a cheat sheet. You can literally get it below. All you need to do is comment the word interest rates. So literally put in the link below interest rates and I'll send you the cheat sheet. Right, let's move on to Brent Johnson. And this was another one that was illuminating because it was about America and China. And what is the big conflict with America and China, and specifically with Donald Trump, Make America Great Again, putting America first. What is the impact in terms of that? Now, he's got a company called Dollar and Milkshake Theory, or a principle called Dollar and Milkshake Theory. And the whole talk was around the implications of America first. So in 1945, when they did Bretton Woods, it became a rules-based order, and the whole world has operated like this since 1945 until Donald Trump came along and he's literally blown it up. And the reason he's blown it up is because whoever's going to win the AI or tech race with China is going to dominate the global economy for the next 50 to 100 years, just like America's done for the last since 1945. And so it really comes down to a simple principle of who controls the tech will control the global economy. He then went on to prove, and he said, look, it's well known in America, there's a lot of problems, there's a lot of debt, the debt is increasing by $2 trillion just since they did the last investor summit. It's now $37 trillion in terms of that process. But he went on to then talk about China and China's significant problems. Their debt, they've got much more debt. Between 2004 and 2014, they did more debt in 10 years than America had done in 200 years. Let me repeat that. Between 2004 and 2014, China did more debt in 10 years than America did in 200 years. Then from 2014 to 2024, they doubled it again. So it's an astounding amount of debt that China actually has. 35% of their total GDP comes down to housing. And it's really, really bad when one industry dominates your entire economy, your GDP, by that much. They've got a massive demographic problem. 50, 60 years ago, they said that people could only have one child. And so their demographics are falling off a cliff. And they've got an aging population, which if you look at Japan, it's the exact same scenarios as what Japan had 40 years ago. And Japan's been in stagflation for 40 years. And no matter what they do, they've not been able to get their economy from basically below zero or zero for the last 40 years. And Clem Sunter talks a lot about this, when in 1987 they spoke about scenario planning and the impact that the Japanese golfers weren't going to the golf clubs anymore because of affordability. And Japan's population's gone from 120 million to 100 million, and that's why everything is stagnated, but most importantly the property market. And China has the exact same problem, but worse than that, they've got 50 million empty homes in China. And on top of that, they've got an aging population. So they're going to have a supply problem, they're going to have a demographics problem, and they're going to have a challenge where 35% of their economy is based on housing. So one of the things that I found absolutely fascinating is he proved to us why the Chinese yuan has been supported by the Chinese reserve, I don't know what you call it, and how they had $4 trillion in reserves, which they built up over the last 30 odd years. And now they've already spent $1 trillion supporting that currency to try and stop it devaluing. And they've only got $1 trillion left because $2 trillion is not in US dollar reserves. Now again, for the wealth hackers and mastermind members, I will go into this in a lot more detail to explain it for you. What's important though is in 2014, when the yuan lost and it devalued, it had a significant impact on global markets. It literally wiped off value globally. And what he went on to say, which I loved as a quote, he said, a lifeguard in Zanzibar will feel it if the yuan falls. And he had a graph, a chart, which again, I'll show for the wealth hackers and mastermind members, which if it happens, and his theory and what he proved to us was it's going to happen, will send a deflationary wave across the entire world. And it's going to have dramatic impact for asset prices. So as investors, this is something we really need to look at, and specifically those of you that are in the stock market, because it's going to have a dramatic impact on stock markets globally, which is why so many of the wealthiest investors in the world are moving into alternative assets, because they are not as dramatically impacted, although they will be impacted. That's why he literally said a lifeguard in Zanzibar will be affected. And he finished the talk by saying that we have a very tough 5, 10, 15 years ahead. He's not sure of the time frame, but he guarantees you, it's like Game of Thrones, and he showed the series Game of Thrones, where he literally said, it's going to happen, it's guaranteed to happen, it's a place, but it's not one big event, it's not one global financial crisis, one day, boom, JP Morgan, whatever, all that, wasn't JP Morgan, who was the company that went bankrupt, the big bank that went bankrupt. It's not going to be that, it's going to be a series of slow cuts, death by 1,000 cuts, and a very difficult, 5 to 15 years. We then moved on to Brian London. And sorry, just before I go to Brian, if these are things that are interesting to you, every single Friday I do the weekly wealth insight, and I each week will take one of these different chapters. And by the way, there's 40 presentations while I'm here for the next 9 days, and I'm going to take each one of them, I'm going to deep dive and go into them in more detail. So I'm giving you the high level flyover, but I'm going to be able to share it with you. All you got to do, click on the link below and join the group. And if you come to the wealth hackers and the mastermind members, then I will literally hold your hand and take you through it. I'll give you cheat sheets, I'll give you action plans, and I'll make it easy for you. Right, let's move on to gold. Now this is something I don't really know anything about. So I always like to focus on income producing assets. Gold's something that's never really made any sense to me. I know Robert Kiyosaki and everyone talks about it, but I don't own any gold. Own it up front. So Brian London said, and he owns the gold newsletter, and he went on to prove to us why gold is in such a unique position. And he literally said, He spoke a year ago, and he told everyone that gold was about to go on a gold rush, and or a bull market, whatever you want to call it. And it started in February last year. They did this event in June, and he showed us that in June it was $2,200 for an ounce of gold, and now it's $3,300. So it's literally gone up 1/3 in the space of 12 months. And a lot of the stuff that he said was going to happen has happened. And he then went on to say there's a lot of stuff that he said was going to happen that still hasn't happened, and there's a tremendous opportunity when it comes to gold. So he said when it comes to gold, there's two things. The first is that you own it for insurance. So it's a hedge. It's a hedge against the markets. It's a store of value. And ultimately, no matter what happens in the world, there's an argument that your wealth is at least safe within gold. So it's an insurance. And then he went on to say his second thesis is it's an investment and to try and prove it to us. So the reason that gold has gone up, and I'm going to cut through all the noise. The single biggest reason that gold has gone up as much as it has since 2022 is that the central banks have lost favor in the reserve banks. They've lost favor in the US Treasury, the bond market, etc., and they're now buying gold. In the past, where they used to be buying bonds, specifically American bonds, and by the way, the American bond market is 90% of the total global bond market. I mean, it's incredible. It's unbelievable how much of a majority that actually is. I mean, literally, think about every country in the world, and America's got 90% of the bond market. Now, central banks around the world have lost faith in the American bond market and are starting to buy gold. And they're buying it at about 500 tons a quarter all over the world, and the Chinese are actually leading this in terms of that process. So when he looked at all the statistics, and I'll go into this in a lot more detail for the Wealth Hackers and Mastermind members, when you look at the statistics, gold is currently sitting at $3,300 an ounce. The expectation is that in this bull run, the last time this bull run happened was in the 70s, in terms of there was a short time in the 70s, and there was another short time in the early 2000s. And this is the third time it's happened in the last 50, 60 years. The expectation is for it to get to $6,000 to $8,000 an ounce. And if you take the trajectory of what happened in the 70s, so there's two different scenarios here. The second scenario is could get as high as $25,000 an ounce. And a lot of that's got to do with where global instability goes and uncertainty. And I think the defining thing for me that literally blew my mind was that central banks are the ones. And this came up with, there were so many speakers. I'm about to go to this gold panel. There were so many speakers, and every single one of them said the impact was the central banks, and that's your takeaway here. Again, if there's something that interests you, come and join the conversation, and we can talk about this a lot more. We then went on to a gold panel, and it was interesting. I don't know if this is accurate or not. I can't quote that yet, but it was claimed to be the best gold panel that's ever been put together. We had Dana Samuelson, Peter Schiff, George Gammon, Ryan London, Mike Maloney, Robert Kiyosaki, and Brent Johnson. So 7 of them. And I mean, I don't even know how to do it justice in terms of trying to give you feedback on this. But one of the things that I found so interesting is that Donald Trump, with his tariff wars, and you know, they call it Liberation Day on the 2nd of April. One of the guys, I can't remember who it was, George, I think, said it was Idiocracy Day or something in terms of that process. But what happened on the 2nd of April this year, 2025, is that the American bond market actually went into spasm. Now, what was so interesting is that the head of the Reserve Bank came running into Donald Trump's office and said, listen, you need to sort this out because this is going to cause a global crisis, and you do not want that happening under your presidency. And within 7 days, he retreated on the whole tariff thing with China. And the reason being is that people had lost faith in the American bond market. And that's why the central banks are all going to gold and are not trusting the Treasury. Now, just a bit of a caveat here. People have asked me to ask specific people questions. Now, one of the questions that someone asked me to ask was, Robert, and again, you can join that, click on the link below, come and be part of the conversation. But Robert Kiyosaki has been saying that the world is going to fall apart for, I don't even know, but the last decade or more. I mean, I was reading about that in 2009, 2010. And so one of the questions was, Robert, you've been saying this is happening for ages and it hasn't happened yet. You know, what's going to change? Well, there's 2 things that are going to change, and I'm literally about to tell you. The first thing that Robert answered, I was sitting literally having a drink with him at the bar when I asked him this question, and he said to me, Scott, it is happening. Look at what's happening with the bond market. Like, the same narrative is coming up over and over again. Doesn't matter who you speak to. It's a crisis of trust around the American Treasury, and by the way, bond markets worldwide, but I remind you that America is 90% of that, and that once that happens, it's the decoupling of the entire financial system in terms of that process. And so Robert reinforced that. By the way, George Gammon went on to talk about that, and so did Peter Schiff. So Peter Schiff, who has a book, and I literally bought the book, and I should have it here to show you. Sorry, I don't. But the point is, it's talking about the coming crash in terms of it. And he said there's 3 things that you need to look for. And he too has been talking about this crash for a long time. And by the way, just to give this man a bit of credibility, he called the global financial crisis in 2008. Everyone called him a bit of a whatever, and he called it, and then it happened, and then everyone respected him afterwards. Well, he's been calling it again, and he says there's 3 things you need to look for. The first is that the bond market's going down. The second is that the US dollar is going down. And the third is that gold is going up. He said those 3 things, bond market down, US dollar down, and gold up, are the 3 biggest signals. Remember Clem Santa? You've got scenario planning, you've got flags, and then you've got probabilities. Well, these are the flags. The 3 biggest flags are the bond market down, the US dollar down, and gold up. And he said when those 3 things are happening, that is the sign that the impending crash is about to happen. He then went on to say that if you're if you're a stockbroker and you want to get access to the best trades, it's all about insider knowledge. All of us want to be on the inside. And he said, who are the best insiders in this entire game? Well, it's the central banks. And why have the central banks since 2022 been investing in gold? Well, because they know what's coming. They can see the writing on the wall, because the bond market is down, the US dollar is down, and gold is going up. Now, you can read into that whatever you want. Peter Schiff is certainly someone that I'll be following going forward. An amazing speaker, and I'm still looking forward to his presentation. And by the way, if you want to be on the in a circle and you want to be on the inside, click on the link below, and I would strongly recommend joining the Well Packers and all the mastermind, and ultimately coming in and having these conversations and getting access to this latest information from the best in the world. The last thing was around silver. Again, something I know nothing about, but what was so interesting is that normally the ratio of silver is 15 to 1, so they call it the gold-silver ratio, 15 to 1. It's gone as high as over 100 to 1. It's currently sitting at about 90 to 1, and on that basis, silver is expected to have a huge growth. Now, it's had a significant growth over the last couple of months, but what's so interesting is that silver is also a utility, and in about 5 years' time, all of the silver that can be mined will actually be used for industry and for technology and in production. So it's quite an interesting thing. Some people were very for silver, some were very against silver. There was definitely a divided market within the panel, or a divided panel, as to the future of silver and what people should be doing. And then finally, the last one was real estate niches. And this is the one that I found really interesting, because this is the one that I kind of already knew about and what I learned about more than a decade ago when starting to invest in America, and to be honest, more than 2 decades ago when I was learning from Dr. Dolph Ferris, the author of Real Estate Riches. So a couple of the fundamentals that are happening and that you just need to understand. So the first is that, and again, you must understand, America has 300 MSAs, Metropolitan Statistical Areas. That's 300 cities. So you can't say that when one person stands on stage and tells you what's happening in Phoenix, that it's happening all over America. So I just want to give you that caveat. It's very, very important that you understand that. So I'm going to give you information, but you've got to generally understand the geographic specific of where that market is. But let's just look at some high levels. From what I heard from most of the speakers, when it comes to multifamily and apartments and condos, the rents are going down. The HOA fees, which are the rates and taxes, are going up. And so what is happening is that a lot of investors are sitting on the sidelines. And what's interesting is that even the first-time homeowners, if they put down a 10% deposit, they get a 90% mortgage from the bank, they're borrowing at about 7%. It's much more expensive to own a property than it is to rent a property, which is why both the investors and the homeowners are sitting on the sidelines, and in many markets, the property prices in residential are actually coming down. A lot of the speakers spoke about the fundamentals. I'm going to go into this in a lot more detail over the next couple of days, but it's all the same fundamentals that we've heard about. The single biggest one, population growth. You have to look at states and cities where there's population going up, because just like a rising tide rises all boats, population growth is the single most important thing, and it's one of the things that we've done extremely well in Florida, in Atlanta, in Texas, Oklahoma, because all of those markets consistently have had massive population growth, even being accelerated through COVID, and that's added to the property values. The next thing is for it to be business friendly. So you've got these different states where some of them are tax friendly, some of them aren't, and so again, businesses want to do business in business friendly states, and people want to have jobs. So people are going to move to business-friendly states because there's jobs, and people that want jobs need houses. So not only do they buy houses, property prices go up, or they're tenants, rentals go up. So you want to be in business-friendly states. And then landlord friendly, and this is where it really gets quite contentious here, but you've got blue states, which are the liberal states, and you've got red states, which are conservative states, and generally the red states that have the landlord-friendly environment. So, most of us that are international investors, we don't want to take our money out of the country we come from and then go and invest in America and have a tenant, and you can't kick the tenant out. There's no point in doing it. You might as well leave your money in China or South Africa. Well, the point being is that there are certain states, like Texas or Atlanta or Florida, that are very landlord friendly. Like you can literally, have what's called a put out crew, and if someone doesn't pay the rent, you can literally put them on the street. Whereas, places like New York or California, you literally have to marry your tenant for life, whether they're paying or not, in terms of that process. Another one that I found really interesting, which I didn't know, was what's called the rent to value ratio. And you should never be investing in residential property unless there's a 0.7% ratio. So what that means is that your rental is 0.7% of the total value that you're paying. It's a good little market to learn for the future. They then spoke about AI and the impact that AI was going to have. And there were different reports that had come out from very sophisticated banks. I'll have to go and check all my notes. Again, when I go into this in more detail for the Wealth Hackers and the Mastermind members, I'll let you know about that. But according to some of the research, over 300 million jobs are looking to be replaced. Robert Kiyosaki spoke about this personally, and 25% of the workforce. And the single biggest employer in the world is transport, and transportation is going to be taken over by AI. It's one of the first in terms of where we're at. Something that Robert Kiyosaki spoke about, and George Gammon and Peter Schiff, which I found fascinating, is that the baby boomers are in deep trouble. They have made a lot of money. They are trusting the financial industry. They've got most of their money tied up in the stock market and or bonds, and all of those are in deep, deep trouble. And one of the things that they went on, Robert Kiyosaki spoke about the significant impact that inflation was going to have on the baby boomers, and the fact that they weren't prepared and that they were not invested in assets which were inflation hedges. They also spoke about the millennials and the fact that there's unaffordability and the impact that that has in terms of the process. And what they spoke about, and this was Kenny McElroy said, there's three things that he looks for when it comes to investing. The first is that it's an inflation hedge. By the way, he's looking to do $1 billion in 2025. He's done $500 million so far this year. We're halfway through the year. And he says the next 6 months is going to be extremely difficult. There's a lot of headwinds in terms of being able to make good investments. But there's three things he looks for. The first is that it's an inflation hedge. The second is that it cash flows. I talk all the time about how the importance of income and what you need to know. And then finally, you need to use the tax laws to your advantage. And today, actually, we've got someone teaching us about, is it today or this week, I'm not sure, 1031 exchanges and how to use tax to your advantage in terms of that process. Right. One of the things around tax, which is really interesting, is that this tax specialist said that there's a whole bunch of tax laws that are going through they've gone through I don't know the political thing, but they've gone through the House and now they're going to the Senate, or the other way around, representatives, House of Representatives. But the bottom line is it's gone through the one, now it's going to the other. And in the next 1 to 2 months, they're expecting very favorable tax laws to come out for real estate in America. So that's a significant opportunity, and we're going to talk a lot more about that within the Wealth Hacker community, and specifically the Mastermind community, because when it comes to commercial property, the real estate investors are extremely excited in terms of this process. Now, what I'm about to say to you is going to scare you, but it also represents a significant opportunity. There was someone that specializes in commercial real estate financing, and in 2025, there is $1 trillion of debt which is due. $1 trillion of commercial real estate debt which is due in the year of 2025. 25% of that is expected to be delinquent. So think of the global financial crisis in 2008. Banks lend money. There's no problem when they're lending money as long as the asset retains value. And George Gammon went into this in a huge amount of detail. But if the property price goes down, the real estate price goes down, then the bank is underwater and they have to default on their loan. And that created the entire cascade of the global financial crisis. We all know about the subprime crisis. Well, in the commercial real estate space, $1 trillion is due in 2025. I've got all the graphs to show you this. You can literally join the community and I'll share it with you. And 25% of that is delinquent. So what are they doing? I love the Americans. They've all got these sayings. So they've got this thing now called extend and pretend. So they extend the loan and they pretend that there's nothing wrong with the asset. But what she expects over the next couple of years is a slow bleed, because the market is going to have to correct itself. These delinquent loans are going to have to be called, and the banks are going to have to write this off, and it is going to have a material impact. Now, that can represent fear, and it can also represent opportunity. If you've got the right partners, knowing the right opportunities, she spoke about an aged care facility where the note was $9 million, and one of her clients picked it up for $1.2 million. So it represents significant opportunity, and the typical saying, Warren Buffett, you know, when there's blood on the street, there's opportunity, or be fearful when others are greedy, and greedy when others are fearful. But it's coming down the pipe, and you need to know about it in terms of that process. So if you enjoyed this video, it's a long one. Yesterday was a long day. It started at 8 o'clock in the morning and it finished at about 6 p.m. last night. So it's, you know, every day is not going to have as much, I don't think. We're actually boarding the investor ship today, which is pretty cool. But if you click on the link below, join us in the Wealth University. I will do a daily recap every single day in terms of what I've learned. It's very valuable. Just by the way, this is not only a gift in terms of me sharing for you, but this is me synthesizing all the knowledge that I learned in the last day, which is incredibly valuable, and thank you for giving me that opportunity. And then every day, I will take one of the people who I found the most valuable, and I'll create the cheat sheet for that. So today, it's George Gammon and the interest rates. I believe as an investor, and specifically, you know, because interest rates impact the stock market, they impact the real estate market. It doesn't matter who you are, they impact you. And so I've created a cheat sheet for George Gammon, and you can literally click on the link, go to the community within the Wealth University. It's free, and all you got to do is comment interest rates, and I will give you that report in terms of that cheat sheet, in terms of where we're at. And if you're interested, I would join the VIP Vault. That's where my wealth hackers and my mastermind members, I will literally give you access to all of my knowledge. I will share with you my notes. I will share with you all the different pieces. I'll share with you the cheat sheets, but more importantly, I will turn up every Friday and I'll take each and one of these topics and I will talk it through in detail so that you have the knowledge. And the last thing, knowledge without power is irrelevant. It's all about action. And so I will literally give you action steps on what you can actually do with it in terms of that process. And finally, if this is all of interest to you, as you know, on the 22nd of July, we're launching Wealth Going Global, and it's the relaunch of Wealth Going Global. I could not be in a better place on this planet to be learning from the best in the world so that I can bring you the best knowledge, the best fundamentals, the best systems, the best advice, the best tips, the insider knowledge, whatever you want to call it, so that when we run through the Wealth Going Global, which again, just to remind you, is why do you invest? Module 1. Number 2, how do you choose the top 5 countries in the world to invest? Number 3, how do you find the top 5 currencies in the world to invest? Number 4, the top 15 assets, literally, what are the top 15 best assets to invest in the world? Number 5, how do you find the right partners? You know, you can't globally diversify without the right partners. And number 6, how do you bring it all together and leave it with a plan, with a wealth plan, and with an investor strategy sheet? I think that's me. I'm now going to make my quick video on the 5 tips, the short one, but I hope you enjoyed this, and it's been amazing for me to synthesize the entire opportunity. I cannot believe how grateful I am to be in this opportunity, to be here, to be learning from the best, to be networking with some incredible people. I hate the word networking. I prefer the word making friends, but this is an incredible opportunity, and I look forward to sharing it with you. If you've enjoyed this, subscribe, share it with your friends, and most importantly, come and join the conversation. You can see that I'm getting some incredible insights, and I want to share them with you. Click on the link below, and I'll see you inside. Cheers.